You may have heard the term Roth Conversion. You may know what that is, and you may know all the rules and regulations, and you especially will know all of that if you watched our previous video that Rob did. Now, what may be unclear is when does it make sense to do a Roth Conversion? That's what we'll be covering in today's video. So let's do this. First, let's define the problem, or let's define a common constraint that people run up against in retirement. And to do that, I want to throw something up on the screen here. So what you're looking at there is a pie chart of it's just a sample financial plan. This is the balance sheet. And let's see here, what do you see? All right, so there's the different categories of investment types or accounts by tax status. Well, let me give you the punchline. That big category of qualified retirement could potentially be an issue down the line. And here's why. The qualified retirement category refers to those pre-tax investment funds. You're thinking, Seth, what do you mean that's a problem? Pre-tax, it's growing tax deferred, that's fantastic. How could that be an issue? Well, here's the deal. When you turn age 72, the IRS makes you want to start withdrawing those funds a little bit each year. So what happens is if you have a large percentage of your investment assets in pre-tax accounts, as you can see when you turn 72, looking at your cash flow report, you may very well wind up taking way more income out of those accounts than what you had otherwise intended. And this, of course, represents a tax problem. So basically, if you've got a large percent in the pre-tax funds, when you turn 72, depending on what your spending target is, you may have a tax issue on your hands. And as you can tell, it leads to these drastic swings in your overall tax liability from one year to the next. During the working years, your tax liability is high, and when you retire, it drops way down low. Then all of a sudden, you turn 72, you have required minimum distributions, and it's back up through the roof. It's very inefficient. So what we do on our end is, for clients, Roth conversions make sense. We sit down each year and we calculate. Now, how much does it make sense to go ahead and convert this year? And so if you look on the screen there, really the net effect, kind of a side-by-side comparison, is we backfill, those tax brackets, and we fill those up with Roth conversions to really have a level effective tax rate each year of the plan. Now, you may be asking yourself, why would I want to do that? Why would I want to volunteer for tax liability today when I could kick that can until I'm 72 or beyond? Well, there are some benefits. So let's look at those. What are the net benefits of this Roth conversion? Now, firstly, I should say there are benefits to your plan during your life. So this is going with the same, sample financial plan. If you look at those compounded benefits of that tax efficiency, out to your life expectancy, it's a pretty nice gain shoot through just basic, tax planning strategies. That being said, a lot of our clients turn to the Roth conversion not solely for the benefits during their own lifetime, but also as an estate planning strategy. So I want to show you another analysis here, the same scenario. So we're going to throw up on the screen here. This is a comparison of the estate distributions out at the end of the plan, right? So both spouses pass away out, age 90 plus. And this is what is being passed on to the heirs. So as you can see, there is a great savings in overall tax paid in that process, and then therefore a great gain in the net amount that is received by the heirs. And really, that is a function of the composition of the estate's assets at the time of your passing. So let's play this out. We started with the balance sheet, let's end with the balance sheet. So if you fast forward all the way to the end of your life, so on the left-hand side of the screen is going to be, pre Roth conversion, right? No, ignore the Roth conversion strategy. That's on the left-hand side. On the right-hand side would be your balance sheet in the event you did enact a Roth conversion strategy. So what's the difference? What do you notice? Obviously, that Roth category is much larger. And remember, those funds are now tax-free to you and to your heirs, right? So as your heirs receive those funds, they can take distribution from that category with no tax consequence. So as you can tell, the Roth conversion, it's one of those things where you can derive a great benefit to yourself, to your heirs, simply by planning. Just simply by strategizing these moves, you can have a huge impact. And so maybe you had heard of a Roth conversion, but now seeing all this, you're sitting there going, wow, I didn't know all that was possible. Well, here's another question. What other strategies are out there that you're missing? What other strategies out there that you could potentially be benefiting from if you simply just reached out to a professional to get some help? So I would encourage you to do so. There's no commitment. We'd love to sit down with you, get to know you, and see if the Roth conversion or any other strategy may benefit you and your family. A great way to get started is with our complimentary 3D assessment. Check out our website in the link below, and you can use that to actually get scheduled. Can't wait to see you soon.